But if they see Afterpay on your bank statements, what it tells them is that you are living beyond your means. Want to talk about serviceability? There are key things to understand that the bank does not want to take risks. They want to show that you can afford it above and beyond, and there are certain metrics that you have to demonstrate to them before they give you money. I know Afterpay is Australia's darling, one of Australia's biggest companies. They've done really well, sold it for $60 billion. Congratulations to them. But if they see Afterpay on your bank statements, what it tells them is that you are living beyond your means. It tells them you do not have enough money to maintain the lifestyle you want, therefore you will not have the money to pay for the mortgage. Credit cards, paying them off at a certain point in time. I am not against credit cards. I am not against car loans. I'm not against any of those because there is such a thing in Australia of having no credit profile and therefore having a poor credit rating. It is important that you build a credit rating, which means you have debt and you pay it off effectively. So having a credit card of $2,000 to $3,000 that you pay off every month is only positive, not negative. Having a car loan that you can afford comfortably. The amount of people that have come to me and said, I want to buy a house, I can comfortably afford it, but by the way, I bought a $160,000 Dodge Ram and my repayments on that are $2,800 a month. Serviceability shot straight away. Uber Eats and things of that nature, they don't affect as much as you need to, but I have a trick and I want to show you this trick. I have an account system. I set up 3 accounts, one called savings, one called cash, and one called spendings, right? The cash account is where the money comes into. That cash account is where I get my wages, where I get my distributions, where I get everything, my rent, everything comes there. Then it goes into 2 different accounts. One is savings. I want to show consistent savings to my bank to show that I am servicing. The third one is spendings. I don't want anyone in the world seeing that. When a bank is asking for your account history, they want to see the money going in, money going out, what's left. In the spendings account, I might put that in my wife's name. I might put that in my mother's name or whatever that needs to be for someone who doesn't want to buy the debt, for example. And in there, I might have my private school education for my kids, which I don't necessarily want them to see because it's going to go against my servicing. I might have my Uber Eats, my restaurant spending, my cafe spending, my going out. Every single expense that is ad hoc and irrelevant, I will have in there, so that they cannot go through my accounts line by line by line and ascertain whether I'm a good spender or not. I will purely show them my money going in and money going out. Whatever's left in that account, whatever's left in the savings account is all I need to demonstrate to them that I'm a good lender, a good borrower. Everything else is noise. I do not want to put noise in front of them. If I'm sending money overseas regularly, if I'm putting money into someone's account regularly to take care of them, that all has to be there because everything that is shown in the savings and spending account is then assessed. And therefore, my HEM, which is what's considered by the banks to be the indicator of what your spending is brought into question. You want to show the bank as little as possible. You want to give them as limited reasons to say no as possible. The more you put on the table, the more you expose yourself to. Debt is not your friend if you cannot maintain it. Showing that you can pay your rent, for example, and your mortgage by spending that mortgage component in there is clear as day to them that it's a really logical decision. But showing all the money going in and all the money going out month to month, Lord have mercy, you have no hope. If you're going to buy multiple properties, I always suggest putting them in trusts, even though despite the new government's ruling say they get taxed differently. So be it. Because if you have them in trusts, then you have to put them in on every single servicing on the next one because trusts are quite good at showing separation of assets. And that's standard practice. Everyone knows that you have several things in trust, but it can only show 1 or 2. That's the way I increase my serviceability. But again, structuring is all personal. Speak to your accountant, speak to your tax lawyer, speak to whoever you need to find out what's right for you. That's just me. Hope that helped. Guys, we are getting thousands upon thousands upon thousands of views a day. Please like, subscribe. If you're loving the content, press the notification button. Jump on board. More free advice just for you.